is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now let's get back to the Investor Allstars Conference, where Bloomberg's Tom Mackenzie is joined by another guest. Hi, Tom.
Hi, Francine. So a couple of minutes ago, we were speaking to one of the leading startups here in Europe. Now we're going to be speaking to one of the leading VCs and the partner at EQT, which is Europe's largest listed private equity company, Carolina Brochado. Make sure I get the name and the pronunciation correct. Thank you very much indeed, partner at EQT, formerly at Atomico, formerly at SoftBank in the Vision Fund there. I want to get your views to start with on what we're seeing in terms of VC funding for startups in Europe. It's been a dynamo of a year. At the first half, we saw about 50 billion euros pumped into startups across Europe from VCs. Do you think that momentum sustains itself? Are we at healthy levels at this point?
No, it's super interesting. And having been in Europe now in tech for 9 years, we've seen the capital invested in technology companies in Europe continuing to increase. But we are currently at the most rapid pace. So we're on track to hit 100 billion for the year from the 50, and that would have been 140%, I think, growth year over year in terms of capital invested in Europe.
And that's above the US and above Asia, is that right? I mean,
yes, that's right, in terms of growth. Yeah. But I think, historically, Europe had been very underfunded versus the US and Asia. When we first looked at it, when I was at Atomico in 2014, a Series A founder in Europe had 14 times less capital available to them than a Series A founder in the US. And so now that gap is narrowing, and more talent comes into the ecosystem, sees success, breeds success, and so you see the flywheel really spinning in Europe. So we expect, to answer your question, that we'll see more companies get to growth stage and get to greater and greater market caps as well.
Are you concerned at all about valuations with this amount of liquidity and this amount of funding being pumped into the startup scene here? Are valuations starting to look a little frothy?
Yeah, we always keep an eye, and it's hard because some people have been saying that valuations have been high for 5 years. Okay. And so of course you always look at the historical averages and whatnot. What we try to do at EQT, we're very thematic investors, is we try to understand the market and the trends, and how big an outcome can be, and whether we can make a return investing now or not. And I think the multiples today are what they are, and you can't really predict the future, but what you can do is you can try to really understand the company's position, the market trends, and then the execution abilities of the team. And
you're leading up the growth fund at EQT that was fairly newly set up, and of course you've got the venture fund at EQT and then the private equity part of the business. What is the rationale then for the growth fund?
That's right. So the growth fund was a little bit of the gap, right, in trying to support entrepreneurs from seed through to growth and then beyond, because we also have a public value fund. And we were seeing a lot of actionable deal flow, companies like Klarna or Spotify that weren't buyout candidates, but were now too big for the early stage ventures business, but are fantastic businesses. And so with that, we are now one of the only platforms globally that can really have these different pockets of capital and dedicated teams that can create domain expertise, operating partners that are fit for purpose for the different stages, because companies will need different kinds of attention at different stages.
Okay, so where are the opportunities in Europe right now? What are you focused on in terms of turning that firepower into real value at companies across Europe?
Right, so we look at every geo, because we think that there's incredible companies coming out of every market. From a theme perspective, we are spending a lot of time on software companies, of course, a lot of time in fintech, and of course we invested in Molly, and you just chatted to Shane, and health tech. We see that there's a lot of potential there. And then we also spend a lot of time on what we call climate tech, which is really food tech and energy tech, where we think there's a lot of disruption potential, but still not a lot of capital being invested in those businesses.
And a lot of US funding is now turning their sights to Europe as well. Is that additional competition for you healthy? Do you welcome it? What do you think underpins that sentiment from the US?
Right, and actually, of rounds over 100 million, 90% of them were done by non-European investors. So the market today really is made up of US and Asian investors. We think that's exciting for us because we are the boots on the ground, and we welcome it because, capital plus talent plus success, breeding success, really makes the ecosystem grow. And we think that there's still a lot more opportunity in Europe.
How much of this is about funds as well turning away from China, given the tech crackdown we're seeing there? Is that something you're seeing? Is that a material change?
We haven't really seen it yet, particularly in this asset class, but potentially something we'll see.
Talk to us about the capital markets. Is this a good time for a tech startup to be listing? Or would you advise your founders to hold off as growth looks and valuations look in the capital markets, arguably fairly toppy, and where we're looking at high interest rates longer term?
Yeah, it's hard to give a general answer because I think it depends. Some companies are ready for the IPO, and bear in mind the IPO is just a pit stop on a journey, right? It's just a different way to raise capital, and I think now there's, with SPACs, right? There's more avenues for companies that perhaps aren't so traditional in what they're doing. But I think, for some businesses, they're taking big risks and they can't afford to stay private longer and take those risks in private. There's advantages to that versus having to take those risks in the public eye. But it'll really depend on the business.
Okay, Carolina Brochado, partner at EQT. Thank you very much.
Thank you.
Indeed, on the insights in terms of what has been a very, very solid year for VC funding here of the startup space, tech startup space across Europe. Guys.
Thank you so much, Bloomberg's Tom Mackenzie and our guest there, Carolina from EQT Partners.